Introduction to Price Charts. Welcome to this session on understanding price charts. Price charts are fundamental tools for traders. They visually represent an asset's price movement over time, helping traders analyze trends and make informed decisions. In this module, we'll explore three main types of charts: line charts, bar charts, and candlestick charts, and discuss how to identify price trends using these tools. By the end of this session, you'll be equipped to read and interpret these charts effectively. Line charts, simplicity at its best. A line chart is one of the simplest types of price charts. It connects the closing prices of an asset over a set time frame with a line, offering a straightforward view of the overall trend. Key features: displays the asset's closing price over time. Ideal for identifying long-term trends. When to use line charts are perfect for beginners and long-term investors who want a clean, uncomplicated view of market movements. For instance, if you're analyzing the trend of a stock over a year, a line chart can show whether the overall direction is upward, downward, or sideways. Bar charts. Adding more details. A bar chart provides more information than a line chart. Each bar represents the price movement for a specific period, such as a day, an hour, or a minute. Key features. Vertical line represents the price range, high and low, during the time period. Horizontal ticks: left tick, opening price; right tick, closing price. When to use bar charts are great for traders who want to see not only the closing price, but also the highs and lows of an asset. For example, if you're trading Forex, bar charts can help you analyze how volatile the market was during a specific trading session. Candlestick charts, the trader's favorite. A candlestick chart is the most popular type of price chart among traders. Each candlestick provides a detailed snapshot of price activity during a specific time frame.